So I just read a news article on Montel Jordan's internet that there is an idea being floated around of a 50-year mortgage. Let's talk about it. What's going on, good people? It's your brother, your uncle, your favorite realtor's favorite realtor coming to you with another video. And I'm just getting a little upset, y'all. I mean, there's truly we're living in the last days, as the as my grandparents used to say, because there's an idea that's being floated around to offer potential homeowners a 50-year mortgage. So we're going to talk about some of the potential benefits of something like that and the numerous pitfalls. And wherever you lie in the matter, just know that when these types of things are floated about, it's very rarely in the consumer's best interest. So let's talk about the traditional mortgages that are out there now. All right, so you got your 15-year mortgage, you got your 30-year mortgage, you got your adjustable rate mortgage. There's a myriad of mortgages that have been happening in the past, and the normal traditional ones that we rock with are the 15 and the 30-year, either on the FHA side of things or the conventional side of things. Around the 2008 housing crisis, if you were young enough to remember, around that time, the way of the world for many borrowers was the adjustable rate. And so one of the problems that happened with the adjustable rate mortgage, which subsequently caused the crash that we navigated in 2008, was that interest rates changed. And certain individuals got into homes at a lower interest rate. And when those interest rates changed, because they are adjustable rate mortgages, it turned into a situation where many Americans were in homes that they could not afford at all. So with a lot of what came from the '08 crisis, just the housing market in general has said that fixed rate mortgages is going to be the way to go for majority of individuals. Underwriting standards are much more stricter for folks because there was like bank statement loans or stated income loans. It was a lot going on way back when. But now, in the majority of cases, having a fixed rate for either 15 years or 30 years is going to be the way to go. On the 15-year side of things is you have a higher payment, which means you build up a lot more equity a lot faster, but that higher payment can be pretty significant. So most individuals take the 30-year because the payments are just more affordable. Our first home, we were on a 30-year, and I can't tell you at way back when we started our real estate journey, if we could have ever been homeowners, if we couldn't get into an FHA or a 30-year type of mortgage. So the idea that's being floated around right now, because the housing market is at a bit of a standstill in many markets, we got the government shutdown as of this recording, that's ending. So housing we're in a pretty different place. As a real estate professional, and many of us, this has been a tough year production wise, just because of factors that are above our control. So with the 50-year mortgage, the goal and the objective is that Washington wants to help lower payments for many Americans that are looking to own property. And so with the 50-year, if you think about spreading your payments over a 30-year loan, which is the standard longest period of time you can have a mortgage. When you spread it over a 50-year period versus a 30-year period, that's 20 extra years of having a loan. So your payments are expected to be, under this proposal, significantly lower. So the problem that comes from that is that, yeah, you got lower payments, which is great. You got more cash flow, so you got the ability to do other things with your money with those potential savings. I've seen in my lifetime loans as long as 40 years. Usually you can do a recast if you're in a situation where you're getting ready to lose your home and your lender can extend your loan like 40 years. But this is completely uncharted territory that we're navigating right now. And so when you have a 50-year mortgage, if you think about that, that typically means that you will now have more purchasing power, because maybe you couldn't afford that home on a 15 or a 30-year mortgage, but now all of a sudden under a 50-year mortgage, that $700,000 home becomes way more affordable, because not only are you going to be paying through your lifetime, you're more than likely going to be paying through your children's lifetime. And so the perceived benefit is that you have more cash flow, lower payments because you have the more cash flow, and increased purchasing power. But let's look at this thing pragmatically. Okay, if I'm a bank and I'm agreeing to let a borrower hold the note for a borrower for 50 years, I got to get something for that if I'm a bank, right? So your traditional banks right now, as of this recording, interest rates are floating somewhere around the sixes. So if you are on a 50-year mortgage as a bank, that presents a higher risk for me as the note holder because not only am I not sure you're going to live that long to be able to pay off that mortgage to its completion at the end of 50 years, but that's money that's tied up in an asset that the return on that investment is just too long of a window for me to get something around the 6% rate of return. You're going to expect, if a bank is willing to approve you for a 50-year mortgage, you're going to expect to pay somewhere around 7 or 8% interest, which is, that makes it a lot more appetizing to know that I'm going to, as a bank, going to get a 7 or 8% return on my investment every year for 50 years. And so if we're looking through the problems with that type of loan structure situation is that you're going to take forever. If you're a buyer, you're going to take forever to build equity in that property. So imagine you're in year 4 of 50. You have zero equity built up in 4 years. You're more than likely not going to even build up equity until probably year 20, year 25 is when you're going to, at the least, is when you're going to start to build equity in that property, because objectively speaking, you have no skin in the game because your mortgage is stretched out over 50 years. So as a bank, it's a riskier investment, especially if individuals are purchasing homes later in life. That means they're already, you know, up in age and then getting on a 50-year note. It becomes a very, very, very problematic situation. But what I'm noticing is a lot of builders are excited about this. I won't name the main one that's really getting behind this because I kind of like that builder. And all of a sudden, they're really excited about this particular program. But I would tell there's not a buyer walking this earth that I would say with comfort that I'd be okay with them getting into a deal like this. I don't care that the payments are going to be significantly lower. Just continue to rent until you're in a position to where you can own a property comfortably over a 15 or 30-year period, because you're going to get in that home and yeah, you've got low payments. I mean, if you're an investor, this is great because now you have more cash flow that you'll build up because of the lower payments. Because remember, as investors, the delta between what we're paying the bank and what we're charging renters, that middle is the profit that we are making off of the deal. So if you're an investor, you might have investors that would love a 50-year note because their sole focus is cash flow, cash flow, cash flow. But if that's not you, and if you're purchasing a home as a first-time home buyer and you just feel like, you know what, I'm in California or New York, I can never afford a home at the current 15 to 30-year period. Let me go ahead and get this 50-year mortgage. You're going to find out very quickly that your risk is significantly higher than an individual in a 15 or 30-year mortgage. And then think about it as current note holders that have the 15 to 30-year mortgages. They're not going to let that go easily unless they want to jump into a bigger property. So they might say, you know what? Yeah, I'm getting 3%, 2.5% interest on my 30-year mortgage, 15-year mortgage. Let me go ahead and build up my cash flow by selling this asset and then jumping into a 50-year mortgage. I just don't see a scenario where that would mathematically make sense. And although it seems like something that's very appetizing and meant to be a benefit to us as consumers, cavit emptor. And I mean that, and that's buyer beware, because that's a scenario where I don't truly see a situation where that's going to be a positive for the majority of individuals outside of having a lower monthly payment. That's it. I would much rather you rent, maybe get a roommate, house hack, those traditional ways that we as homeowners that can lower our monthly payment. Get a property under a 30-year note and then bring a roommate in that helps cover half of your mortgage, something like that. Or if you're really adventurous, rent out rooms in your property. Maybe you get a regular single family home that's like a 5-bedroom. If you're the type that loves community, then you don't mind renting out each of your individual rooms and making money that way. I mean, it's a lot of tried and true strategies specific to the house hack strategy. That's one of my favorite investment strategies that you can really lower your payment on a month to month basis without putting yourself in a scenario where you're paying a mortgage for 50 doggone years. Your brother, your uncle, hey, I want to sell your house. Regardless of where you are in the United States, you can work with me and my team to purchase your next home, but I will not advocate for someone to take a financing situation like this unless there are some completely unique circumstances outside of just wanting a lower monthly payment. I'd much rather you leverage some of the great strategies that I just mentioned today that will allow you to get into that home that you love, but not be house poor in the process. So let me know in the comments below if you are a real estate professional. What are your thoughts on the 50-year mortgage? Do you see this as something beneficial to consumers? I mean, of course, there's a lot of agents that now feel like their buyers are going to be ready to take advantage of something like this, but look beyond your commission check. It's always bigger than the commission check. I always said it. You got to be able to sleep at night. And personally speaking, there is not a scenario that I can think of that I would feel comfortable with a client of mine being in a mortgage for 50 years. They're not going to make any equity. Let's just get that out the way. They're not going to make any equity for many, many decades, which is very problematic. And if you compare a 50-year mortgage to a 30-year mortgage, the payments don't really change that much. I mean, it's a drop in payment depending on the price point, but those other factors like property taxes, insurance, those are factors that are market specific, and they make up the largest portion of your mortgage payments in many cases. If your taxes are your PITI is what it's called, principal, interest, taxes, and insurance are all added into your payment, the taxes are what makes up the biggest part of it. And I don't want you to put yourself in a scenario where you think you're outsmarting the bank. Remember, when these types of plans and programs are presented, it is for the bank's benefit because they want to get people in homes and properties sold so that they can make their money. And don't get it twisted. I'm a part of that industry. I'm a part of that. But I am the guy that's going to look at this from as clean of a process and as high of an integrity process as possible because I don't want to see clients put themselves in a negative situation. But let's have a conversation in the comments below. Do you agree with my hot take about the 50-year mortgage being a no bueno situation? Do you disagree with it? Let's talk about it in the comments below. And before you go, YouTube thinks that this video right here would be advantageous to you to watch before you jump off of this channel. As I always say, when you find this video, make sure you watch at least one more video from the channel before you bounce. And if you're really feeling like supporting your brother, make sure you subscribe to the channel for more content, and I will catch you on the next one. Peace.